For people who pay attention to mortgage interest rates, the past 2 years have been a lot of fun to look at. It took the Federal Reserve a while to lower the federal funds rate in 2020 because of the pandemic, but rates kept going down. Since then, they moved up a little, but they're still not very high. Owners and people who want to buy a home in 2022 should think about what they can expect. Mortgage experts weighed in on what the mortgage interest rate might be for the upcoming year. If you're thinking about refinancing, you might want to start the process as soon as possible rather than wait until it's too late. But before we continue with the rest of this video, please remember to click the subscribe and thumbs up buttons as well as the bell notification icon. This way you'll be the first to know whenever we release new exciting videos. Also, we'd love to hear from you, so please leave a comment in the comment section below. Make sure you watch the entire video as we will mention a free way for you to win a $20 Amazon gift card. Okay, now let's continue with our video. What mortgage interest rates look like currently? Freddie Mac reports that the 30-year fixed-rate mortgage averaged 3.11% for the week, ending November 29, 2021. Even though that's up from 2.72% in 2020, it's still quite low. The high cost of housing has deterred many potential buyers. According to CoreLogic, home prices rose 18% from September 2020 to September 2021. In fact, rising home prices can help homeowners refinance. Homeowners in the US can and have benefited from cheap interest rates. Freddie Mac reports $1.3 trillion in first lien refinance organization in the first half of 2021. That's a 33% rise over the first half of 2020. Forecasts for mortgage interest rate in 2022. With 2021 coming to a close, many potential and current home buyers are looking ahead to 2022. Should they buy or refinance before year's end? How long till interest rates rise? Or will rates fall next year? Of course, no one can foresee with 100% accuracy without a crystal ball. But here are several scenarios. Forecast 1. Mortgage interest rates will not change in 2022. The National Association of Mortgage Brokers President Linda McCoy forecasts no change in mortgage rates until the second quarter of 2022. We know that refis are slowing down, and everything has slowed down a touch. But there are still people moving out of smaller houses to get into bigger houses, so the housing market is still moving, just not as fast as it has been. Even with inflation, McCoy expects rates to remain stable. If rates went up, it would hurt low to moderate income borrowers, McCoy says. The Fed is very focused on them. Forecast 2. Mortgage interest rates will gradually increase. According to Nadia Evangelou, Director of Forecasting and Senior Economist at the National Association of Realtors, interest rates will continue to increase in 2022. Inflation rose to its highest since 1990, says Evangelou. When inflation rises, lenders ask for higher interest rates as compensation for the decrease of purchasing power. Thus, if inflation remains elevated for a longer period, that will drive up mortgage rates. Evangelou expects the Fed will boost rates to fight inflation, she said. In fact, the Fed is expected to do that by the first half of 2022 in order to control elevated inflation. This strategy will push up rates even further. Finally, another factor that will lead to higher mortgage rates is Fed's tapering, which is about to start, she added. With Fed slowly reducing its monthly bond purchases, bond yields will move up as the supply of these funds will increase in the broader economy and bond prices will drop, following the trend of the 10-year Treasury yield. Mortgage rates will go up as well. Based on that, Evangelou anticipates 3.3% for the first quarter of 2022 and 3.5% for the whole year. That's hardly a big leap from current rates, which Evangeline blames on the job prospects. She also says the economy is still recovering, missing nearly 4 million jobs. Hence, consumers shouldn't panic. Even with this increase, mortgage rates will be slow. Forecast 3. Mortgage interest rates are going to be erratic in 2022. In 2022, multiple economic forces will be at odds, according to Melissa Kahn, Regional Vice President at William Raiffeisen Mortgage. According to Kahn, the Fed pledged they'll start tapering bond purchases late this month to fight inflation. That will theoretically send rates higher. She expects the pandemic to continue affecting mortgage rates. Cohn said, medical experts are saying we're still far away from herd immunity, so people going indoors for the winter and returning to offices could create another pandemic wave. That would be detrimental to the economy and bring rates down in the next 6 months to a year. Cohn expects rates to fluctuate by a quarter to half percentage point. Cohn added, the economy is still pretty tenuous, and I don't believe it can withstand much higher rates. At some point, mortgage rates will go up, but probably not until the end of next year. The fourth quarter of 2022 is when we'll see the bulk of rate increases. How this could affect borrowers. If interest rates in 2022, refinancing demand will certainly fall. Higher mortgage rates and housing prices will undoubtedly discourage prospective purchasers, especially first-time buyers. Frequently asked questions about mortgage rates. What impact does the Federal Reserve have on mortgage rates? The Federal Reserve does affect mortgage rates, but not directly. The Federal Reserve determines the federal funds rate, which is the rate at which banks lend and borrow money, generally overnight. A press statement is issued every time the Fed meets to emphasize committee members' economic views. Mortgage rates tend to increase when their overall position is positive. Mortgage rates begin to decrease when their outlook is negative. What causes mortgage rates to change? Mortgage rates are influenced by several factors including inflation, consumer spending, unemployment, and the total housing market. Mortgage demand tends to rise with a prosperous economy, and so do mortgage rates. What is considered a decent mortgage rate? A good mortgage rate is determined by the average mortgage rate. In January 2021, the average 30-year fixed rate mortgage was 2.65%. But not everyone who bought or refinanced that month got a cheap rate. Your credit score and home's location, price, loan amount and duration, and the size of your down payment may affect your rate. What credit score value do I need to qualify for a mortgage? The credit score required for a mortgage varies depending on the loan type. The minimum Fair Isaac Corporation or FICO score for conventional loans is normally 620, while certain lenders may have higher minimums. The Federal Housing Administration requires a minimum credit score of 500. Those with credit scores below 580 must take a higher down payment, 10% versus the 3.5% rate available to borrowers with credit scores of 580 or above. What should I do to lock in a good mortgage rate? Some lenders let you lock in a mortgage rate before your loan closes for 30 to 60 days. If price rise during this time, your rate won't rise with them. Some lenders, on the other hand, charge a fee to set a rate, unless you pay extra for a float-down option. You may not be able to take advantage of lower rates after you've already locked in your rate. This option lets you switch to a lower rate after you've locked in. We hope you enjoyed this video. Again, don't forget to subscribe, like, click the notification bell, and leave us a comment below. We love to hear from you, and we'll be doing a random name drawing of the first unique 100 commenters of this video. The lucky winner will get a $20 Amazon gift card. So get involved and don't be shy.